Hello friends, this is Raj Sastry from Raj Option Trading. Today I want to talk about top performing 3D printing stocks. So with that, today is May 7th, 2021. So here are a couple of images. One is from Nano Dimension. These folks do very good 3D printing, especially for circuit boards. Then you got Align Technologies. They will basically make sure you have a beautiful teeth. They got nice product. And the last one here is XONE. They're also into 3D printing and it's also a good company. So with that, global 3D printing market is expected to grow at a compounded annual growth of 21%. So that's a very impressive, growth rate. And these companies I'm going to cover, they will take a good chunk of this growth. So with that, let's dive in and look at few companies and see how we can invest in these companies. So here is a list. We got list of 22 stocks as you can see here, and these are arranged by performance, 1 year performance. The one on the top, PYR, a very low dollar stock, $4.71. It's got impressive 830% growth in 1 year. And then we got Nano Dimension, and it's got 813% growth, and it's in a descending order. And typically what I look at when I look at these companies is I look at how is the sales doing. I like to see very good sales acceleration. Clearly, PYR has got nice sales acceleration as you can see here. 1 year 270%, a quarter over quarter 535%. That's an impressive sales growth. And I also like to see a gross margin. As you can see here, this is a very impressive gross margin. So it's a $742 market cap, $14 million in revenue or sales. That's an impressive growth rate here. And as you can see here, institutions are not buying it too much at this point. Typical institutions will buy when the company gets a little bit bigger. So with that, I guess this is a very good stock to invest. And as we see here, nice growth rate in 1 year. And as you look at 1 month, they got negative, minus 26, 2 week again negative, 1 week negative, 1 day negative. So at this point, as you can see here, I would wait for this to turn around a little bit. And once the bleeding stops, I mean, once I see an uptick, I'll be investing in this stock, and this will do very well as you can see here. And this case also got some negative reports from a short seller. That's one of the reasons it's coming down a little bit. Next is Nano Dimension, and this is also a good stock, $6 stock, very low price. And these guys have got a little bit lower revenue, just $3 million, and negative 1 year sales growth and negative quarter over quarter growth, and good gross margin. And as you can see here, it's got a little bit higher short ratio, and it's a little expensive from a valuation perspective. Even PYR is a little expensive from a valuation perspective, price to sales perspective. And as you can see here, this stock has done nicely for 1 year, but as you can see here, they are negative for 3 months, all the way to 1 week. And now today it's kind of turning around and try to make a positive move here. I think that's a good sign. This company can benefit from this uptrend, I would think. Next is Eastman Kodak. This company tries to reinvent itself every time, and now as you can see here, it's done nicely for 1 year. And sales is good, 1.2 billion dollars, but sales growth is negative. Gross margin is 13%. Institutions are buying it a little bit. That's a good sign. I think overall, this stock is good to buy when it's down. And as you can see here, it's in 1 day it jumped up 6%. I would catch this on a little bit lower day, when the price is a little bit lower, and when there is a pullback, I would catch this stock and buy some. Next is one of my favorite stock, Align Technologies. You could even buy this stock in a investment fund. or in your long-term investing portfolio and just buy and forget about it. This company does very well. They're into dental, technologies, and they got very good, product to make your teeth look good. As you can see, a nice $2 billion revenue, nice acceleration from a revenue growth, very good, healthy gross margin, and institutions are buying it. Very good institutional ownership here. And as you can see here, they've done nicely for 1 year, 177%. And as you see here, they've done nicely for 6 months, but 3 months it's negative, 2 weeks is negative. Now it's trying to turn around and try to go up. So I think with that, this is a good stock to buy and invest. I mean, they are not, completely into 3D printing as you can think about. They're into rapid, teeth products to make your teeth look good. Next is VJET. As you can see, a $13 stock. They've done very nicely for 1 year, and sales growth is negative, as you can see here, $26 million sales, and nice gross margin. And as you can see here, this stock is also kind of done very well. But as you can see, 3 month, 1 month, 2 week, 1 week, all negative. Now they're trying to go up a little bit. So I think all the 3D printing stocks, as you can see here, they've got a little bit rough, 1 month and 3 month. Now some of them are trying to turn around. Next we got XONE. I think it's also a good stock here. It's got good 1 year sales growth. Quarter over quarter is negative, not too much, just minus 0.90%. And they got good gross margin, as you can see here, 24%. And it has done very nicely for 1 year and 6 months, but 3 month, 1 month, 2 week, 1 week, all negative. Now it's trying to go around a little bit and try to make a positive move. That seems to be the trend for most part, as you can see here. Next we got HP. This is not a pure play 3D printing. They're into printing in general, and even they also have computers. As you can see here, this stock has done nicely for 1 year, and I think these guys are all along positive, as you can see here. I think working from home caused people to buy more and more printers and computers. That's a secular trend for this company. Then you got Trimble here. Trimble also has done nicely, good sales, but 1 year sales growth is negative, quarter over quarter is positive. And as you can see here, this stock has done nicely for 1 year, 149%, and they're a little bit down for 1 month, 2 week, 1 week, and now they're trying to go up. So I think that's the trend here. Now we see 3D Systems here, $19 stock, not too much at all. Very good sales, $2 billion in sale. I mean, market cap $2 billion. Sales is $557 million. And, in quarter over quarter, they're positive sales growth, but in 1 year, they're negative sales growth. Nice gross margin. I love this gross margin, 40%. Institutions are buying into this. That's a good sign. And very high, short ratio, something to watch out for. This one and even XONE and Eastman Kodak, they got high short ratio. Any good news, these stocks can go up. And as you can see here, it's done very nicely for 1 year. But if you look at 3 month, 1 month, 2 week, 1 week, it's all negative. And if you purchase the stock, when it's up, you'd be kicking yourself a little bit. But hopefully you did not buy option, because if you bought option, you will be losing your money that you paid for options, because it's all along negative since last 3 months. Then you got Renishaw here. Renishaw is a little bit, it's not very liquid type stock, but $87 stock. As you can see here, it's done nothing for 1 day, 1 week, all the way to 2 week, and it's done good for 1 year. So this is one of those stocks, you don't trade often, but you buy and put it away type stock here. Doesn't trade too much, volume is low. Then we got ALTR. Nice sales growth, as you can see here, 1%, in 1 year. I mean, it's okay, not great. And they got a quarter over quarter, so 7.70%, and a little bit higher, short ratio, as you can see here. And they've done nicely for 1 year. And then, my favorites are here: PTC, Autodesk, even Dassault Systems, ANSYS is one of those great stocks, and Proto Labs. Proto Labs, as you can see here, it's a great stock, but it's fallen down. 1 year, it's 2% up. But if you look at 6 month, 3 month, all the way, it's down, big. So now in 1 day, it's trying to turn around. I think this one could be good to catch at this point and buy some and hold it for a long time. And last but not least, we got Desktop Metal. This used to be one of those high flying, stocks. It's fallen down now 55% for 3 months, and now it's slowly showing some signs of recovering and high valuation, as you can see here, and high, short ratio. So with that, these are the companies I would be looking at, and I would be, buying these on their, I think many of these are trying to go up in 1 day, as you can see here, but they're down for 1 week, 2 week, 1 month, and some of them at, in the 3 month range also. So with that, let's look at a couple of these companies in a little more detail and see if it's worth investing in them. So first is PYR. It's Pro Genesis Canada Inc. As you can see here, it also it does this enhancing metal recovery type products, and this is used in batteries, as you can see here. And from a news perspective, looks like they have a new short report from Marina Research. These guys are trying to push the stock down by these short reports, and also looks like they don't have good internal controls. Given it's a small company, it may not have all the good SOX and audit controls. And generally, I think they also they had some production rate target raised, which is a good sign. I think overall, I think news is okay, except for the short seller report here, which is causing the stock to go down. And from a fundamental perspective, as you can see here, nice sales growth. I like this, and nice 1 year growth. And it's fallen off in 1 month, 2 week, 1 week, and even 1 day. So this could be a good time to buy. Given there is some bad news around the report, from short seller, but generally it's a good stock. Has fallen down in 1 month time frame. And from a margin perspective, this company is really, it's got a earnings. It's a great story. It's got 22 cents earning, and they got a good net margin, which is a good story. Company is making money, and they got good amount of cash, $14 million cash, very low debt, $2 million. And I think volume perspective, a little bit lower volume, as you can see here, which is okay because you can't expect some of these stocks to go up, especially because there is a low short ratio. It's not a short squeeze type scenario. It's understandable. This is one of those stocks you buy it when it's down and forget about it for a while. And nice 1 year, 2 year, 5 year growth. It's not a one hit wonder. It's not just 1 year it's up. It's also up for 2 year and 5 year. And they also got good ROE and ROI. That shows management is really effectively using their asset. That's a good sign. And next earnings is 7.1, so you don't need to worry about any earnings risk here. So with that, let's look at the chart. I mean the fundamentals here. As you can see here, as you see look at the company's market cap over the period of time. It was 45 million in 2018, back in September, grown to 47, 61, 53, 50, 40. Now it's 465 million. So as you can see here, company are done nicely. It's a very good acceleration in the market capitalization. I think somewhere around, with all this COVID, stock has fallen. I mean, even with the COVID, I think it has done nicely. As you can see here, 630 earnings and 330 earnings. It's pretty okay. A little bit down, 331 earnings is a little bit down. I mean, market cap is a little bit down, but overall, I think they've done nicely. And from a price perspective, as you can see here, they've done nicely, 36 cents. So back in 2018. Now they're at $4.71. It's one of those good steady eddy stocks. And nice sales growth. I love this sales growth. They've done nicely. And sales is also pretty okay. I mean, it's doing well. I think in the 12/31/20, it's a little bit less, but overall it's a good revenue growth. From a earnings per share, it's doing nicely. It's positive, which is always good. They're earning some money, which is always good. Low debt, as you can see here, good cash. Probably they got some financing or something nice. $14 million cushion here. Good gross margin, good net margin. And price to sales perspective, it's a little pricey, but it's okay, manageable. So with that, I would think it's a good buy. Now let's look at the chart here. From a chart perspective, as you can see here, this stock has caught fire back in February. As you can see here, huge rise. So this could be because of probably a short squeeze or something along those lines. It came down, went up, came down all the way, and slowly it will make its way up. So at this point, given stock has fallen off so badly, and given there is a good sales growth, sales acceleration, and they got a positive net margin, positive gross margin, and even positive earnings per share, I would think it's a good stock to buy at this point and hold for a very long time. With that, let's go to next stock here. Next is Nano Dimension, NNDM, and this is also into 3D printing. As you can see here, they're into multi-layer circuit boards, radio frequency antennas, and sensors and whatnot. And I think this company acquires another company, Nano Fabrica Limited. That's a good story. I think they also acquired one more company here, which is a Deep Cube, which is into deep learning. As you can see here, this company is not afraid to acquire other companies, even though it itself is a small company, about $1 billion market cap, is trying to grow through, organic as well as through acquisitions, which is always good. And as you can see here, from an earnings per share perspective, it's negative, which is understandable. Companies investing into itself. From a sales perspective, I think it's a little bit done very well in 2019 and 2018, but now a little bit downtrend. I think we should see this improving as we go forward, especially because they got two acquisitions working for them. Shares outstanding, I think this is a good sign. Their shares outstanding is reducing in count. It's always good. The moment you have low supply and high demand, stock will go up. And from a fundamental perspective, they've done nicely for 1 year, 813%. But if you look at 2 year, 5 year, they're negative. So that's why you got to buy when it's down. Right now it's down. You could buy slowly, and hopefully this stock will turn around. And from a cash perspective, they got good amount of cash, $671 million, and they got low debt, which is always good. And a lot of volume. It's a very liquid stock, as you can see here. 3-month volume 23 million. 1 month, 1 day volume is 12 million, which is a very impressive volume here. So with that, I would buy this stock during this pullback and hold it for a long time. And if you look at the fundamentals of Nano Dimension here, nice acceleration from a market cap. That tells you company is really growing, and market Wall Street is really paying attention. Between 9/30/2020 to 12/31/2020, they have grown from $132 million in market cap to $2.2 billion in market cap. That's a huge, acceleration. And from a price perspective, I think they were $19 stock back in 2018. Now they're $9 stock. That's a negative story here. I think it has to improve. Low sales, as you can see here, it's just doing $2 billion in 12/31/2020. I think they have to kind of improve this situation also, and improve the revenue basically. And if you look at earnings per share, negative, and say quarter over quarter sales growth is also negative. I think they have to change this situation also. And from a cash perspective, they got good amount of cash. Probably they got some financing done, and nice gross margin, at least on 12/31, and negative net margin and operating margin. From a price to sales perspective, it's a little bit expensive. 100 plus, actually, it's very expensive. And they've done nicely, as you can see here. $6 stock. I would buy some on this weakness and hold for a long time. I would not buy any options at this point. I would buy stock outright, given it's a low price stock. From a chart perspective, chart from Thinkorswim, as you can see here, its IV percentile is 56.2. So I would not be buying call options. I would buy the stock outright, because if you're buying call options, you're paying high, because IV percentile is high. But if you want to sell put option, because stock is at around $6, if you want to sell put option, you could sell maybe some $5 put or $4 put and see if it makes sense, if there is any premium in that. But I would buy the stock outright versus buying options or selling options at this point. And from a volume, on the balance volume perspective, it's a little bit negative. As you can see here, it's flat to coming down, which is always understandable because stock is down. That's why on the balance volume is also showing a little bit downtrend. Check-in money flow is pretty steady. I think that shows smart money is kind of slowly warming up to the stock. And earnings is coming in 3 days. So as earnings approaches, this stock can catch fire. That's a very good possibility. As you can see, earnings, stock went up, earnings, stock went up, then came down. Now stock is already down going into earnings. That can cause the stock to go up because all the negative news is already factored in. This could be time for it to turn around. So with that, I would be buying this stock with this in this downturn and hold it for a long time. Next is Align Technologies. It's again very good company. They're into medical device. They do this Invisalign Technologies, clear aligners. A lot of people love this technology, and many people I know, they kind of go for this this technology. And all the dentists, as an example, they keep sending emails. Hey, do you want to do a quick evaluation for this Align Technology? So with that, if you look at the news here, I think news looks okay. I think they dropped a little more here. They dipped more than the broader market. But overall, I think it's a good one. Looks like hedge funds are also buying into this technology or this company. So they also announced some accelerated buyback. I think they must have seen their stock prices attractive at this point. So they bought some stock, their own stock. And if you look at the earnings per share, very nice acceleration, very good here in 2020. And the sales acceleration is beautiful. I love this. They've done nicely. And shares outstanding is steady. I don't want to see shares outstanding to grow. So with that, if you look at fundamentals here, I love this nice market cap, very nice sales, $2 billion, nice sales acceleration, nice gross margin, and nice 1 year, 5 year, 2 year, very good growth. This is not a one hit wonder. It's also done nicely over 5 year period, which is 691% growth It's incredible. And from a ROE and ROA perspective, they're double digit positive. That shows management knows how to use their assets effectively. Management is very effective. So I think overall it's a very good story here. I would buy into this stock and hold it for very long term. If you look at their chart here, it's a 1 year chart from Thinkorswim. They've done nicely, as you can see here. And IV percentile is 2.1%. So with the IV so low, you could even buy call option or call spread, for a long time. And RSI is around 54, which shows it's not overbought. It's trying to improve from here. If it reaches 70 or so, around that, it will be overbought. But now it's not overbought. And DMI chart indicates, this blue line is above red line. That's a bullish signal. I would buy into this. And nice volume average. It's trying to go up here, which is good. Smart money is thinking, when the stock came down here, smart money kind of came down, but now it's stabilizing, which is also good. So overall, I think Align is a good stock. I would buy into this small weakness here and hold it for long term. And from a fundamental perspective, I think it's a as you can see here, nice market cap acceleration all the way from 31 billion into now it's 42 billion. So it's a very nice acceleration here. And share price also accelerated nicely, which is good. And their quarter-over-quarter sales growth is positive last 2 quarters. And I think they had some negative with the COVID. Nobody wanted to go to dentists. That's why stock fell off. But otherwise, overall, it had done nicely. They have been surprising on the earnings front, as you can see here. Very good earnings surprise. That's always good. They got a lot of cash, very low debt. And I think gross margin is good. They're making money. That margin is positive. Earnings per share is 93, a little bit high, but from a price to sales perspective, it's very respectable, not high at all. So with that, I would recommend buying this stock and holding it for a long time. Next is XONE, ticker symbol XONE, and these guys are also into 3D printing machines. I think overall, they're doing well. From a news perspective, looks like they're adding some new experienced sales partners. That's always good. And they announce results on May 3rd. I think they got some negative. People are speculating if they will announce the negative Q1 results. I think overall, news is okay. Nothing bad here. But on the EPS front, I think they're negative. The company is not earning any money. But situation is improving. 2019 it's minus 93, 2020 minus 86. Sales is pretty okay. They've done a little better in 2020. And shares outstanding is pretty steady. As you can see here, I think this is not any alarm at all. It's pretty good. And from a fundamental perspective, as you can see here, they've done nicely at $59 million in sales. Nice sales growth in 1 year, which is okay. It's positive. Quarter over quarter, a little bit negative, but nothing too bad. Nice gross margin, and they got good 1 year performance. And they've been fallen off, 3 month, 1 month, all the way to 1 week. Now they're showing some signs of turning around. And from a margin perspective, negative margin, negative earnings per share, company not making any money, and very good volume. I think their 3 month average volume is 1.3 million, and today's volume is 438,000. I think they got very good 2 year and 5 year return. It's not really fluke. Company has done nicely for 1 year, 3 year, and 5 year, which is always good. And one thing I don't like too much about is the negative ROA and ROE. So I think companies should address this right now. Management is not effective using their assets. I think probably they should address this sooner. So with that, I would buy this company into the weakness. Let's look at chart here. As you can see, our company has done nicely. From somewhere 2021 January, but now it's showing some signs of decreasing here. So as the company goes down before the earnings, that's a probably a good sign. If they show some profit, stock can go up. And from a DMI perspective, I think right now it's bearish because the red line is above blue line. That's the negative indicator. And from a volume average perspective, it's pretty steady, I would think. Not anything to worry about. And from a check-in money flow perspective, it's pretty steady. Nothing to worry about here. And IV percentile is very low. So earnings is coming in 6 days. So because stock price is already at 20, very low, even if you want to buy call options, you could do delta 70 or lower, given it's low IV percentile and also low RSI. Next, let's look at fundamentals here. As you can see, your company has done okay from a market cap acceleration. It was $151 million back in 2018. Now, by 12/31, it's 209. Now it's $1.7 billion. So actually, it's a Nano Dimension. It's a different one. So I should probably get rid of this. But overall, I think this company has done nicely. From a market cap perspective, all the way from 2018 to 2020. And right now, their market cap is $473 million, which is much higher than what it was in 12/31. Next, let's look at SLM. Just a caution here: SLM is not a 3D printing company. There is one more company called SLM Solutions, but it does not have a tradable stock in USA. But this is really a Sally Mae lending company. The reason I put this here is because they've done nice EPS growth, as you can see here, very nice sales, and shares outstanding is also kind of going down. And they've done very nicely for 1 year, and they've done nicely for 5 year, 2 year. So overall, I think this Sally Mae company is doing nicely, and they got a lot of cash and good amount of debt, because this is a this is a lending company, so they got to have some debt to lend the money out. So overall, even though it's not a 3D printing stock, I think company has done nicely. That's why I just kept it here, even though it's not a 3D printing stock. The name is similar to SLM Solutions, but SLM Solutions does not have a stock which is tradable in the USA. So with that, SLM Corp, as you can see, a very nice looking chart. I love this chart. Steady Eddie, always try to go up. No severe pullbacks at all. And from a DMI perspective, as you can see here, blue line above red line, and ADX trying to go up, always a positive sign. I love the volume average going up, and I love check-in money flow trying to go up. So overall, this stock is a keeper. Steady Eddie keeps going up, and implied vol is low. Even if you want to buy a call option, you could buy delta 70 call option. Only caveat I would say is really it's at a over bought level, so it's touching 70 line here, which is over bought line. I would prefer to for this to cool off, but as you can see here, it's been hugging the oversold line since back in October last year. So it may not pull back too hard, but any small pullbacks you can keep accumulating slowly. It's a low dollar stock, so it's okay to accumulate slowly. So with the SLM Corporation, as you can see here, they were $3 billion company back in 2018. Now it's a $5 billion company. It has done very nicely. Slow growth, keeps chugging along, going up and up and up. And from a price perspective, also they've done nicely, as you can see here, all the way from $8 to $17. Now it's $20. So very, steady, methodic type, going up. Nice sales here. Sales growth is good. Back in 331, they got some negative sales growth here, but I think now it's turning positive. Earnings per share surprise is positive. That's a very good surprise, as you can see here. They're making money. Earnings per share is positive. That's good. Good amount of cash. And as you can see here, they got good profit margin and net margin. That's good. Companies making money. And they're also cheap from a PE ratio perspective and also PS ratio perspective. So overall, I feel this is a good stock. I would buy this even though it's not a 3D printing stock. It's a very good, steady, eddy, slow. I mean, slow and steady type growth. So with that, I would buy this company and hold it for a long time. So with that, thank you very much. Happy investing, and please subscribe to Raj Option Trading. Thank you.